But you never know when there's going to be a faulty product or if something does happen to the builder's financial viability in the future after they've finished the product and they're not around. So it is wonderful for us just to have that comfort. That's all taken care of.
So I'm here with Ashleigh Button from Thirdi. Great to see you.
Lovely to see you, Mike.
So we're here to talk about resilience insurance. When did you first come across the product and kind of what were your first thoughts?
Yeah, so we first came across the insurance product a couple of years ago now when it was first rolled out into the market. I think we would have been one of the first developers to actually start taking a look at it. And we saw it as a really good opportunity to get a first market mover advantage on something that we could use to help our buyers get comfort. In a time where you'd seen a lot of disruption in the construction market, you had purchasers getting a bit nervous about what they'd seen in the apartment markets. And we really felt like this was a really good solution to answering some of those purchasers' concerns that they had about the future stability of their properties.
You know, I think for the consumer, you know, they read stuff in the media and we see the kind of behaviour change on our platform where, you know, if there's one bad news story about a developer anywhere in the country, it affects the whole site, you know, or every developer in some way. And so I think, you know, in high quality developers like Thirdi, where you guys have a really strong brand of like delivering iconic projects. When you guys are kind of taking the lead on some of this stuff, I think it helps the market to kind of understand that there are gaps between a really high quality developer and the people that are not quite at that level. Given you guys have such a strong brand, did that kind of come into the factor of like, do we need this product or can we just use brand or how do you think about that?
Absolutely. We were very resistant to it when it first came out because in some respects, even though we saw it as a great product in the market, we'd gotten all of our strata bonds back. So when you change from a project cost where you are getting your money back, even though the cost of the bond versus the cost of insurance is relatively the same, it's a big change to your bottom line ultimately when you are getting it back. But I guess where we saw real opportunity was in the fact that it's that first line of defence that you're seeing for purchasers to know that if something does go wrong in the future, that insurance is in place. We don't need to spend copious amounts of resources ourselves internally trying to navigate through this process. Traditionally, a lot of strata managers automatically engage in a legal process at the end of a development purely to protect the interests of their clients. And that process ends up being a long and strung out process that's really unnecessary for everyone to go through. So we see the insurance offering as a better way to circumnavigate that at the end of the project, where both parties can have that security that the project is complete. There's that safety in place for anything that does go wrong. And it also means it's less admin on either side for both the owners corp as well as us as the developers.
Totally. I can see how that would be the case. And, you know, one of the things that buyers often tell us they like about the product is the fact that they have this technical inspection service that comes through once a month. Do you want to talk a bit about what's that like having a third party coming through your project as you're kind of building it?
Yeah, so for us, what we really like about that is probably in the instance of builder insolvency. So we have a lot of those processes already set in place to make sure that everything is perfect in our building. But where it really adds value is in the instance, obviously the construction market has had a lot of challenges over the last few years. You've seen more and more builders go broke. And whilst you do everything at the front end to ensure that you're partnering with a builder that has the financial stability to complete the project, there is always risk. There's other projects that can go awry for the builder. And so I think for us, it's really about knowing that in that worst case scenario, the incoming builder that would step in and take over that is able to have comfort on ensuring all of that work that's already taken place to date, which is a really challenging thing for developers previously.
So you're saying it's the kind of handoff process. You know that if something did happen with the builder, the handoff is going to be smooth because of the documentation around the technical inspection, is that right?
Yeah, that's right. So basically what would happen, so in the instance that we've done some in-ground works and we've started our structure, if our builder was to go broke, obviously there's a lot of difficulties for the next builder that would come in to replace that builder. And that allows us the security to know that we're not going to be tied up for a very long time with difficulties in relation to warranties of the work that's already been undertaken. It's a huge responsibility for the incoming builder to warrant the works of the previous builder. But by having these third-party inspections taking place as part of the insurance process, it gives everyone comfort that there's been checks and balances and we're good to keep going.
Interesting. And so, you know, some of these things, I guess, from a buyer's point of view, they wouldn't understand that, for example, would be a kind of area of concern. You know, how have you seen the feedback from the agents change over time as the products become more well-known? Are people still, what's resilience insurance, or are they kind of becoming more familiar? What's been the feedback from agents?
We're hearing a lot of positive things from our purchasers around this. The agents really like it because it takes away a lot of the concerns that the everyday punter has around buying off the plan. Everyone loves buying an apartment that was built in the 1920s because they know how well made they were back then. But you have a few bad media articles and all of a sudden everyone jumps on the bandwagon. I don't think our social media has ever been so busy with people saying, will it stand up at the end?
Right.
So what it is really good for is for giving our agents this tool to go back and say, look, you don't even need to worry about this. The developer has invested in a product to make sure that this isn't going to be a problem for you. And it's that first line of defense. So if anything does go wrong in the future, it isn't a months and months drawn out process. It's the claim gets processed straight away.
Yeah, it makes sense. We've run surveys and spoken to our buyers about what they think about the insurance product. And I think most people know that one of the concerns that people have with off the plan is a little bit of uncertainty around the builder or maybe the developer. But when we've talked to them and said, what premium, because a lot of people want to live in something new, but they kind of want to avoid, manage the downside risk. And I think when we've asked buyers and surveyed them about, what kind of incremental price would they be prepared to pay, we've found 70% of people have said they'll pay more than 1.5%, which is kind of the typical. So how do you guys think about in relation to cost and getting it into the feasibility? Obviously, construction costs are going up. How do you think about the cost benefit kind of ratio?
Yeah, I guess for us, we really think about it in terms of that on completion and that administration side of things and what the additional costs to the developer. If we are, in the case where a builder isn't around anymore for whatever reason, it's a really good product there to have in place where we're not going to be tied up for months, if not years, dealing with a legacy issue from an era that should have been managed by the builder. So we see it as a great future-proofing strategy for the business because, if something goes wrong in some of these projects, the items that are of highest concern are those that are hidden within the building. They're the most expensive to rectify. And so paying an extra 1.5% up front is able to offset a lot of those concerns because you know that you're not going to have to go out and rip out a whole bunch of balconies because something went wrong with the waterproofing because the builder cut a corner. For us, obviously, we don't believe that we've got any of those problems with any of the builders that we work with today, but you never know when there's going to be a faulty product or if something does happen to the builder's financial viability in the future after they've finished the product and they're not around. So it is wonderful for us just to have that comfort around that's all taken care of.
Yeah, I think it's just an elegant and cleaner cut solution, I think, for both the buyers and for the developers. You guys can continue developing and ultimately also your brand is protected and that the consumers aren't going to have a negative experience after the fact.
Absolutely. And it's an investment in our customers as well and making sure that they're having a positive experience as a result. So even if something does go wrong, it's not something that they're going to have to be dragged through. My mother-in-law has recently gone through a waterproofing issue on their apartment building, which was finished quite some time ago. And the amount of stress that she's had to go through as an owners corporation member in order to fix that. And it's just not something that you want anyone that's not experienced in that area to have to go through. So I think about her in this instance, and if LDI had been around when that building was finished, obviously things would have been a lot easier and cleaner.
Yeah, and I think, that kind of speaks to the point of after the building's completed, when you've got, say, for example, 5 years of additional warranty, if they move out after 5 years, that kind of adds real value to their aftermarket process. I'm sure if your mother was selling her apartment midway through this kind of waterproofing issue, that could potentially impact the value. And so I think it's as much about that kind of initial transaction and giving the buyer certainty, but also, having an asset that's attached to the apartment through the insurance product to make sure that the next buyer can also benefit from some of the insurance offering.
Absolutely. And I think it's also just a lot easier for the owners corporation to access documentation and things like that as well by going through this process. So there's a lot of transparency, and I think the process is always improved when it's transparent.
Well, Ashleigh, stoked that Third Eye's getting on board and supporting the LDI product. And I think when market leaders lead from the front with these types of things that really help improve the overall off-the-plan market, I think that's how we can make off-the-plan and buying new, just a lot better option than buying established, which is the name of the game.
Absolutely.
Thanks very much.
Thanks, Mike.